Well, what do you make of Greece?
Are you scared?
I'm tired of Greece.
Really?
They owe me a vacation. It's been too many years I've been covering this. I think it's a combination of complacency, as you mentioned, and simply the anticipation that the Europeans have this one covered. And I don't think that's really very accurate. I think Mr. Diamond had said it better, that we all need to stress test our portfolios. We all need to think about how this could impact. We, for example, think that the international markets will be more adversely affected than the U.S. So that this is part of our theme for this year, that we think the U.S. will lead the way once again. So we preferred the U.S. All year long.
But, Tracy, does that just mean that it's really about the Fed that's moving the U.S. markets and not really Euro area at all? I mean, is that our takeaway from today?
I think that's fair to say for today, but I'm kind of on your side. I think markets at this point are really underpricing the risk in Greece. It feels like everyone's gotten so sick of this story that they're just not paying attention anymore, and it's really finally, I'm sure I'll get in trouble for saying this, but I think it's really finally coming to a head. Maybe I'm wrong.
Well, you were just saying before we went on set, you're like, yeah, Joe, I think it might be time to start getting interested in Greece again. And I was like, yeah, well.
Yeah.
Some of us have been interested for a long time.
Interested.
But both of you are not alone. I mean, if you take a look at the forecasters tracked by Bloomberg, 15 of them wind up seeing gains for European stocks this year. Citigroup is the most bullish and actually sees the Euro Stock 600 index jumping 17% through the end of the year. So is that the economy is actually growing, things are getting better, or is that Mario Draghi is going to have to save the day?
I think it's mostly that the economies are getting better and that Mr. Draghi is buying lots and lots of bonds. All the net new issuance of France, Germany, Italy, and Spain for this year promised to a QE in Europe. But at the end of the day, there's still the possibility that the contagion will go from Greece to the rest of Europe by some means other than the bond market. It could be that we see some pricing of uncertainty around which will be the next country that has a banking crisis.
But before you head to the Fed for 1 second, I just want to ask, okay, so you're talking about contagion being broken out, but what if there is some kind of liquidity event in the bond market due to contagion? There is mass redemption. That has to trickle over into the stock market.
Absolutely it would. It's just that we think that probability is lower than it was in 2010 to 2012. There's a lot better, let's call them safeguards in place, and frankly, the ECB is buying bonds aggressively, acting like a central bank of last resort.
So speaking of central banking and Fed, obviously we have the second day after the FOMC, and something fascinating happened, which is that you had Goldman, which had previously forecasted the first rate hike in September moving to December, and you had Citi, which had forecasted the first rate hike in December moving to September. And it seems to me, and others have pointed this out, that you have so much communication. You have the dots and press conferences, both of which are novel things. The idea is transparency, communication, and the end result is two different banks take exactly the opposite takeaways from the decision.
There's still a lot of data to parse. Everyone, I think, would agree that the Fed is data dependent at this point, and as long as the economy continues to improve, we could still see those dots on the dot plot move towards a rate hike in September between now and the end of the summer.
But at the end of the day, you have to wonder, is this a credibility issue with Janet Yellen, as in the markets don't and the banks don't necessarily believe what they're telegraphing?
I don't think it's necessarily credibility. I think it's that she's having to walk a really, really fine line, like a tightrope act, basically, between giving herself wiggle room and still being able to navigate the markets to a certain expectation, right? The thing she's trying to avoid is an unexpected rate rise where markets just panic and everyone heads for the exit.
And obviously a point where she has to then reverse course later on down the road,
right.
too.
So, Tracy, you reported on a story today about a bond that's backed by, as you put it, dirty laundry. Essentially,
awesome story.
Yeah, so essentially we're seeing a rise of esoteric debt, which is like debt that's backed by some unusual source. In this case, It was laundry. What's going on here?
All right. Well,
first of all, what does that actually mean? Like, how do you have a bond backed by laundry? I've got a lot at home, by the way.
It's not actually physically backed by laundry. What it's backed by is equipment leases for washing machines. All right. But, technically, it's kind of backed by people washing their laundry, demand for washing machines. Anyway, You were talking about the central banks earlier. All the stimulus from the central banks has sparked this huge desperation for returns on the part of investors. Everyone's after some sort of yield. They're going into these kind of weird parts of the market. And this particular part of the market is called esoteric asset-backed securities. They're basically sliced and diced loans that might be slightly more unusual than, home loans, commercial mortgages. They get packaged into bonds, sold to investors. You get a better return than buying, a treasury or some other more normal kind of debt.
How are they rated?
Well, this particular deal was given an investment grade rating by Standard & Poor's. I think it was an A.
And this one's laundry, but what are some other examples of this these esoteric asset-backed securities?
So I like to call esoteric ABS God's gift to structured finance journalists. We don't have many, but this is one of them. So you get all sorts of stuff. The typical things are like shipping container leases, timeshare loans, but you get really unusual stuff like franchise rights to restaurants, music portfolios. We had the David Bowie bonds ages ago. Sometimes you get really weird stuff, like right before the financial crisis, there were stud rights for racehorses that were packaged into bonds.
Right before the financial crisis, the key word. Paul, when you look at issuances of these weird bonds sort of really ticking up in 2014, what part of that might make you concerned?
If we saw this not just broadly esoterically, but if we saw it in the housing market, if we saw it in more conventional markets as well. And I think this is where you get the hawks on the FOMC saying, look, we have to at least philosophically put a stake in the ground, line in the sand, whatever you want to call it, that rates have to start moving away from zero.
Yeah, but if you're putting your money in really risky, you could argue really risky assets because they're going to have higher yield. I mean, isn't that a danger? At some point, money is being pushed to the side by the Fed.
This is, no, the idea is that the money is being pushed into laundry bonds by the Fed, and that's when you start to fear the bubble that you're actually referring to. Yeah.
Well, my favorite story of the day was we might be getting a new $10 bill with a woman's face on it. We don't know what woman yet, but there will be a woman by 2020, and I wanted to get everyone's take on who you think it should be. Should I go first?
I think you should.
I'll go first. Okay. I was going with Rosa Parks. I have not heard that out there yet, and I thought that would be an awesome $10 bill. Joe?
I was going to say Barbara Jordan, first African-American woman in the House of Representatives, and I'm biased because she was a Texan, and I lived there for a while, so it's a home state bias for me.
Guys? We gave you time to prepare, so it better be good.
Well, I'm going to disappoint you. I'm going to be really boring and say Eleanor Roosevelt played a big role in the Depression, a crucial role in the formation of the United Nations, even had a sort of background scene role in Bretton Woods, so she's my nomination.
And there was an amazing documentary. It was like 19 million hours on her. It was awesome. Totally check it out. Okay, Paul.
I'm going to go with Clara Barton, a blast from the past, someone who was the one who was instrumental in improving wartime sanitary conditions, saved the lives of tens of thousands of soldiers. But my number two would be my mom.
Oh,
for points and apple pie.
Brownie
hopefully one day they can have personalized bills and we could all have.
Right, that'd be a whole future.
A whole different story. I should point out, I was trying to find out why it was the $10 bill and not the $20 bill, and the rumor out there was because of counterfeiting. But there's only $1.9 billion of notes in circulation for $10 bills.
Is that all?
Not that much. Over 8 for 20.